Are you one of those people that might be asking yourself, will the rate hikes ever stop? Well, if so, stay tuned and we're gonna unpack where we were, where we are, and where we're going. So Wednesday, November 2nd, Federal Chairman Powell decided to raise the federal funds rate once again by 0.75%. That is the sixth rate hike this year. So before we dive into our hopes and dreams of where the future might be going, and whether or not be my hopes and dreams or yours or all of us combined, let's first reiterate what rate hikes do. As a reminder, a rate hike helps curb the increase of spending because your money does not go as far, right? So that is what a rate hike does. So in this section, we're going to talk about where we were and where we are within a 12-month period. From October 21 to October 22, interest rates on mortgage loans have risen 3.8%. One of the easiest ways to chart inflation is through what we call the CPI, or better known as the Consumer Price Index. The Consumer Price Index is broken up in three different categories. One is food, the second is energy, and the third is other, which we'll dive into a little bit more. Year over year, the Consumer Price Index has risen by 8.2%. It's important to start with the energy sector. The reason being is it is the largest increase year over year at 19.8%. And if you're trying to figure out what is included in the energy, think of things like gas, oil, and electricity. That's a pretty big jump year over year. We are all seeing it, we are all feeling it. A close second is food. The food category is broken up into two subcategories. What you go to the grocery store and buy, so therefore food that you have at your home, versus what you would spend by going out to eat. And within that, the food category as a whole has increased by 8.2%. We're all feeling that, probably both at home and going out to eat. The last category that we're gonna discuss is other. Now under other, we're gonna find things like apparel, so your retail stores, tobacco, alcohol, things like that. And that sector has risen by 6.6%. So again, as a conglomerate, all of these have risen year over year by 8.2%. Next, let's talk about the housing market, which is obviously a big one. Again, the housing market as a whole makes up about 20 to 25% of the entire US economy. That is a pretty big number. Now with that, one of the things that I tell people all the time is year over year, we're really not seeing a decline, but rather a deceleration. Now, as we look at the entire United States as a whole, that is absolutely true. However, in certain markets, bigger markets, Sacramento being one of them, and other big cities, those markets are seeing a deceleration combined with a little bit of a decline or flattening of the curve. So let's refer to Ryan Lundquist, our local and trusted appraiser, who has a blog that has a ton of great information around the facts and trends as to what's going on in the housing market. By the way, what's up, Ryan? Hope you're doing well. Thank you for all your posts, man. Continue to do it. We look forward to seeing it. All of our people in the industry love it. Ryan talked about the flattening of the median price year over year from 21 to 22. Now, what that says is that the price last year is flirting with the price this year. So although we saw an uptick, we might be seeing a downward trend. Does it necessarily mean that we are going to actually get under that line? Meaning, are we going to be at a value or price point for a same house a year ago as we are today or in December, for example? The question begs to be known as the time progresses. However, I do think and believe that if it does flirt under that line or get under that line, that it won't be long, my friends, before we're going to start to see the market kind of normalize. Because The reason why it is where it's at is because the interest rates are so stinking high. So if somebody's motivated to sell, what are their only options to do? Continue to lower their price, right? So those people that are moving or selling aren't the ones that are like, hey, I'm super happy with my house. I'm at 3%, so I'm gonna sell and go buy another house. Those aren't the people that are looking to sell. The people that are selling right now, for the most part, are motivated by other reasons. Job moves, downsizing, upsizing, larger families, etc. All of those things. And just remember, and we talk about this all the time, the rates are temporary. Your house is a more permanent thing. So moving on to the next topic, but again, thank you, Ryan, for that. And we're looking forward to seeing what the outcome of those numbers are. But again, I do think the housing market will remain strong and stay strong moving forward. The last of the variables that I like to talk about with regards to where we were and where we are is around the labor force. We've seen numbers throughout 2022 that have shown a strong labor market, and they continue to do so. So if we think about that in the bigger picture, if more people are working than not, then it shows that we kind of are in this strong economy, right? But how much of that is real? And what numbers are we really looking at? Are we looking at people that are working part-time? Are they working 2 part-time jobs? Are there other people in the household that are maybe going to work that weren't working before because they're trying to make ends meet? There's all kinds of things that come into play. But regardless, let's just take away that the job market is still remaining strong. Now let's talk about hopes and dreams moving forward, right? We've talked about where we were, we've talked about where we are, and now we're gonna talk about where I hope to see us going. There are 2 areas that I'm gonna focus on and finish on. The first is the cost. What is the cost of your payment on a monthly basis now compared to what we're anticipating or hoping in the future? The second is, should I buy now or should I wait? In other words, are the cost of homes going to go down even more than they are? Around the expectation of cost, we are seeing inflationary numbers that are peaking at 40-year highs. With that, just remember that despite inflationary numbers, that things are cyclical, right? So the anticipation of the market rate coming back down is very good. Now, a lot of times people ask me, Josh, how long do you think that's gonna be? If it was my opinion, I would tell you based off of a handful of different things and economic resources that I pay attention to on a regular basis, rather than listen to garbage media, no offense, because some of it's good and some of it's not. But it's hard to decipher which is which. With that, I've been telling people anywhere between 12 and 24 months that we would hope and anticipate the rates starting to come back down. And that is to be aligned with the inflationary numbers coming back down as well. So rates at the end of October, beginning of November 2022, are in the very low 7s, okay? So let's just say that the anticipation is that we can get to 4%. So a 7% to a 4% interest rate, which is still probably higher than a lot of you out there, you would save on $500,000 for a loan, $940 a month in payment. Now you talk about being a pretty big adjustment. That is a pretty big adjustment. So just be patient and recognize, and we've talked about this before, date the rate. Why? Because it's temporary. No offense to any of you ladies or men out there, but marry the house. Find a house that you love. My recommendation is to pull the trigger because that house may not come along again. We're not in a desperate time for you to make a decision like you were a year and a half ago. So despite the feeling of frustration because of the rising interest rates, and if you're a buyer that's been sitting waiting, just know and take away the positives or the silver lining here, which is what? You are not competing against 5 to 10 to 15 people and maybe even waiving your appraisal and making an offer sight unseen. You now are back in the driver's seat a little bit, and probably more than you were 6 months ago. So earlier in the week, we did a video about why things are so expensive. By the way, check that video out either here or in the show notes. If it's not showing up here, we linked it below. In that video, we unpack ways to save money and the discussion around blend rate and the cost of money.